Every week, stocks are hitting new highs for completely different reasons. In this series, we break down what's behind those moves so you understand what's actually driving the market. This week, I've been analyzing the companies reaching new highs and noticed two big themes: banks and pharmaceuticals. I've picked one representative stock from each category to show exactly what's driving the gains. Our first stock is Eli Lilly. Eli Lilly is one of the big players behind today's weight loss boom. Sure, they make plenty of other medicines, but the real stars putting the company in the spotlight are Mounjaro, Zepbound, and the next generation Orforglipron, the one everyone's watching as a potential future blockbuster. So why is the stock hitting new highs? It's simple. The market is finally embracing Lilly's ability to deliver after some skepticism back in 2024. In Q3 2025, revenue grew a staggering 54% year over year. Demand for these drugs is huge, margins are expanding, and investors are finally recognizing predictable growth. Put another way, people want the drugs, Lilly can supply them, and the company is executing exactly as promised. That combination, it's a recipe for hitting new highs. Let's dig into the numbers. Eli Lilly's revenue continues to impress. Just look at the chart, and you'll see a straight line pointing up. Net income has skyrocketed to $18.4 billion. That's not just growth, that's rocket ship level growth fueled by strong demand for their weight loss drugs and expanding margins. Investors are taking notice because this isn't a one-quarter spike. Lilly is building a long-term platform in obesity and metabolic health. The next generation Orforglipron in particular has everyone watching as a potential blockbuster, adding even more fuel to the story. Now, before you get too excited, remember, pharmaceutical stocks like this are complex. The science is technical, and most investors aren't doctors or scientists. That's why stocks like these usually trade at a slight discount. The market is naturally skeptical of what it can't fully understand. Okay, let's talk valuation. Eli Lilly isn't cheap. The stock trades at a forward PE of around 34. That's high compared to the broader market, but it starts to make sense when you factor in growth. Analysts are expecting 34% EPS growth next year and 22% the year after, and their targets keep climbing. The market isn't just paying for last quarter's growth, it's paying for predictable, durable revenue from a category-leading obesity platform. These drugs aren't cures. They are long-term solutions people will stick with because they love the results. So what's my take? Eli Lilly is hitting new highs for a reason. The company is executing, the drugs are in demand, and the growth is real. That said, it's not a stock you just buy blindly. The valuation is high, and the science behind the pipeline is complex. If you don't fully understand the medical side, it's easy to get overwhelmed. Here's what investors can learn from Lilly. Respect new highs that come from durable growth or real innovation, not hype. Companies that own a category, in this case, obesity and metabolic health, often get a premium because they're hard to replicate. And finally, when demand is strong and execution is proven, the market rewards consistency and growth with higher valuations. Of course, there are risks. Regulatory setbacks, manufacturing challenges, or unexpected competition could slow growth. But for now, Lilly is a textbook example of a company that combines scale, execution, and a massive market opportunity to hit new highs. While Eli Lilly shows a company growing through new products, Bank of America is doing it in a completely different way. Bank of America isn't making headlines with a new product or flashy innovation. This is a story about execution. Revenue for the quarter is up 11% year over year. Net income grew 23%, and EPS jumped 31% in Q3 2025. Operating leverage is improving, and return on assets is climbing towards 1%. The stock is hitting new highs because the market is recognizing that Bank of America is becoming more efficient. They're reducing headcount, increasing digital engagement, and carefully implementing AI, all to optimize operations and improve margins. Loan quality is improving too, with fewer charge-offs and defaults, which means the assets behind your investment are performing better. In short, the market is finally pricing in that $1 of book value you buy in Bank of America is now worth more thanks to smarter operations, better efficiency, and cleaner assets. It's a story of steady improvement, not a knockout product. Now let's break down the numbers. Bank of America is showing strong performance across the board, but banks are a different beast. It's all about ratios and efficiency, not flashy growth. Book value is up 8% year over year, which means the equity behind your investment is actually growing. Return on assets is approaching 1% and operating leverage improved to 5.6%. This is how you compare banks, how fast they're growing equity and how efficiently that equity is used. That's how you decide if a bank is a good investment. Investors also focus on price to book and price to tangible book because that tells you whether you're buying the bank's assets at a good price. Improvements in loan quality, fewer charge-offs, and higher operational efficiency all make each dollar of book value more valuable. In other words, the market is rewarding Bank of America for doing exactly what banks are supposed to do. Run the balance sheet efficiently, cut costs, and grow equity over time. Of course, no stock story is complete without risks, and banks have a few unique ones. For Bank of America, the biggest is declining interest rates. Lower rates can put pressure on net interest income, which is a major driver of profits. In fact, the bank expects a $2.2 billion loss in net interest income for every 1% decline in interest rates. Then there's the need for consistent operational performance. The bank has made real improvements, but until we see stable, consistently growing net income, investors should remain cautious. Even with a forward price to earnings ratio of 12.4 and an attractive price to book, patience is key. Finally, any unexpected setbacks, whether regulatory changes, competition, or loan quality issues, could slow growth and hurt profitability. Bank investing isn't sexy. It's about understanding the balance sheet, the ratios, and the risks, and being confident that the bank can execute over time. So what's the key takeaway for investors? Bank of America's story is all about execution. Revenue, net income, and EPS are all growing. Operational efficiency is improving, and loan quality is getting cleaner. That's why the market is rewarding the stock with higher multiples. But this isn't a stock to buy blindly. Bank investing is all about understanding the numbers, book value growth, efficiency ratios, and risk metrics. Until we see consistent, stable net income and continued operational execution, it's wise to stay cautious. What we can learn from Bank of America is a lesson in disciplined investing. Sometimes the opportunity isn't a shiny new product, but a business quietly optimizing, improving its balance sheet, and compounding value over time. We also gain insight into the health of the economy. Loan growth is good and charge-offs are low, indicating that things aren't about to collapse just yet. For investors willing to dig into the ratios and understand the mechanics, you can find hidden gems investing in banks, but only if patience and diligence guide your decisions. There you have it, two very different paths to new highs. Eli Lilly is growing through blockbuster products and huge demand in the weight loss space, while Bank of America is climbing by quietly optimizing operations, improving efficiency, and compounding its book value. The lesson? Whether it's exciting new products or disciplined execution, the market rewards companies that deliver real results. Paying attention to the story behind the numbers can teach you a lot about what drives stocks higher, and it keeps you grounded. If this was helpful and you want to learn more, join me on Discord. Link in the description. I'd love to help you. Thanks. Bye.